to the cloud. All right. Well, hello there. Welcome back. My name is Robert Wolf, and I'm an asset coach and a tax strategist. My goal for this podcast really has been to help define what an asset coach and a tax strategist is. There's different ways to accomplish this and approach this, and my idea is really to come from a educational perspective, a very canned, if you will. I want to keep this real, so you'll find that a lot of the guests that I have, and today's guest as well, is that it's just going to be two people having a conversation about different topics, and that's the idea, is really to bring the most out of this, and really to help you as a business owner to bring the idea of how can you, as a business owner, increase one of the most important things you're always looking for, which is cash flow. That's the key, and that's the lifeblood to a business, is cash flow. And there's different ways to accomplish it, and that's the idea with these podcasts. So how do we increase this cash flow? Really, that's up to you and your business. I'm just hoping that we can bring a different idea, a different strategy, some different thoughts into how and what type of cash flow could be beneficial to your business. So I want to be able to bring these different various ways, and really not to give you the feeling that there's a sale happening here. There is no sale here. There's no advice being given here. Everything here is just for educational purposes only. I want to give you the opportunity to jot down questions when you hear certain terms or and technicalities or acronyms, or when we talk about certain things, we in our industry tend to be very specific in our industry and use lingo that you may not know about. And so I want to give you the opportunity to write those notes down. Reach out to me. Let's talk about that and give you the opportunity to really get those answers for you, because the reality is education is what's going to help you get to those additional stages of cash flow. And maybe there's something that you hear from one of these that will help you get to that next level. Maybe not. I don't know. But again, I just want to be able to be a tool and be able to be of service to you. So that being said, again, everything here is just educational purposes. We're no advice. I don't know you. You don't know me. And hopefully we can change that, and we can get to the point to where we can provide that. And if not, we're just giving you information. Then that's the goal of this podcast. So today's guest is a colleague, and I would probably use that as a smaller description than I'd like to really say that today's guest is a friend. His name is Charles Santos, and he's a professional in the life insurance industry. He does represent a particular insurance carrier that I like to use, and I just wanted to bring him on board to give us an idea of what life insurance is from his perspective and his experience. He's got over 18 years of experience in the life insurance world, working with a carrier, and he has access to other advisors, other CPAs, attorneys, very, very high-level individuals that are very creative. And one of the reasons why I wanted to bring Charles on here, besides of that knowledge, is he's really helped me in my business as well. And as you'll find as you watch more and more of these podcasts, I'm really trying to bring people that I work with that have improved my knowledge. And I want to be able to shift that off to you as the viewer. And so Charles has been doing this, like I said, for 18 years. And really, what's been interesting about Charles is just not product knowledge. Charles really has helped with the between the ears of understanding how can I, Robert Wolf, help my client, whoever that is, based on their needs. And so he's really helping the inside me, the in between my ears me, to understand the human aspect, not a product. And so I thought that's very very important for me as an advisor, but really important for you as a consumer, who really is the end user, who's the benefactor of these types of products and strategies. So without any further ado, let me introduce Charles Santos. Charles, welcome.
Well, Bob, thanks for that really, really warm introduction, man. I think I sent you about a 2-sentence bio. You definitely added a lot more to it. Thanks for making me sound that great, Bob. And so thank you very much. It's great to be here. Thanks for having me.
No, I appreciate it. And so let's just kind of dive into a little bit about you, Charles. So you mentioned that you have 18 years of experience. Why life insurance? I'm sure you didn't grow up and you're in high school and learning about things, and all of a sudden one day in school you go, oh, life insurance is where I want to be at.
Right. You know, it's funny. It's a question I ask most people who are purely in the life insurance business. They always go like, "How did you fall into this?" Right? Because none of us went to college thinking, "Wow, that insurance that sounds like that's where I want to head to." You know, it was a series of let's just say events after college. You know, I ended up working for a carrier locally here. It was supposed to be a short assignment. They liked my work. They kept me, and all of a sudden, I found myself in the life insurance business. Found some aspects about it that I liked. And I want to phrase that. I liked it at the time. And then stuck with it. And 18 years later, here I am in it, you know? And I want to say after all of those years, I think you grow to love the business, right? You get better at it. You understand it a little bit better. It's a very complex business. I'm sure, as you know, Bob. But after 18 years, I'm proud to say that I've grown to love it after all these years. So it was by accident, Bob. You know, it was purely by accident, but it was a fortunate one too, one I'm very grateful for.
Yeah. You know, your answer is actually very common when I talk to other professionals in the insurance industry as a whole. Not specific to life insurance, but just in the insurance industry as a whole. You have those people who, you know, try it out, don't like it, move on.
Yeah.
But then you have those people that are on the opposite end of the spectrum where they something about this industry creates this infectious bug. Mm-hmm. And I think it's almost like how a doctor, right? A doctor they become a doctor because they want to help people, and they're helping people from a physical aspect. You know, when in reality, what we're doing is we're providing promises on paper.
Mm-hmm.
But it's those promises and that commitment that really is what allows people, I find, to sleep well at night. Mm-hmm. And so when I talk to a lot of people in the insurance industry that have been doing this for a long time, they really have a doctor's mentality of wanting to serve and help. And that, do you get that feeling as well, working with the various people you work with?
You know, that's such a great point. You know, I think the product itself, I had, of all people, an attorney taught me this term. He said insurance, or life insurance in particular, is an I love you sale, right? You got to love someone or something. If you're a business owner, you love your business. You love your family. So in of itself, the product itself, it necessitates that, right? And so, yeah, I think the people that stick to it, their purpose isn't to sell insurance. That's not the love, right? The love is that I know with what I do, I know I'm protecting something. I know I am furthering someone's retirement. I know that I am helping something continue in perpetuity. And I think when you come to those purposes, and that's more of a definition of purposes and principles than anything else, right? And those would clearly define purpose and principle related to our business. And I think the product just kind of lends itself to that. So I think that's a really great observation. And I think being in the business this long, I've been able to talk to the people who are getting really, really good at it. The people who have stuck with it after all these years, got their 10,000 hours. And that core message, that core principle always remains the same. Yeah, that's a great observation.
Yeah, you know, it's interesting too. I find a lot of people, especially the producers, if you will, if I can use that term. That's an industry term, basically an agent, somebody who is in the business. We use that term internally. But if I could use the term professional as well, the various professionals I've worked with in the life insurance, specifically to life insurance, I have found that they're much more giving of their time and expertise than in other industries that I've had experience with, or other advisors. Because as you know, in the life insurance world, life insurance that I love you sell, to use your term, that an attorney had shared with you, that I love you really is infectious. And when you start looking at and working with professionals that have been in this business, and I want to say 25, 30 years. I was just at a tax conference, and one of the speakers said, okay, so everybody stand up. So there was a room of about 45 people. Okay, so we all stood up. And he said, anybody who's been in this business 10 years or less, sit down.
Mm-hmm.
Nobody sat down.
Really? Wow. Yeah, I'm not that surprised.
Then he said, okay, 15 years or less. Nobody sat down.
Mm-hmm.
Then he said 20 years or less. There were 3 people that sat down, myself included. I've been doing this for 18 years. You would have sat down as well.
Mm-hmm.
I'm like, can we round up?
Yeah, right. Yeah, I'm almost there.
I want to be part of that group.
Yeah. Right.
And then, and as you can tell where I'm going with the story, he kept incrementally going up. There were 2 gentlemen in the room that were there in the business, working a professional in the life insurance specifically, 50 years or longer.
Wow.
One gentleman was 57, the other gentleman was 56.
Mm-hmm.
And they were there to learn.
Mm-hmm.
And I don't see that a lot of times in certain. Now, of course, let me preface this. This wasn't just a normal Facebook ad conference.
Mm-hmm.
These are folks that paid money to be at this conference, that wanted to improve themselves. But what was interesting, about 5 or 6 of the attendees were also speakers.
Interesting. Okay.
And so they were giving of their time, their knowledge, their information to allow all of us to, what's the saying? A rising tide rises all boats.
All boats. Yeah. I love that phrase.
Right.
Yeah.
And it's such a beautiful visual, because that is a service mentality, like you were mentioning. And
Mm-hmm.
so I really wanted to specify that this industry it happens to be life insurance, right? It has to be.
Mm-hmm.
It happens to be a tool. And one of the gentlemen at the conference said, if it was called chocolate chip cookies, and we sold chocolate chip cookies, I think everybody would love it.
Sure. Right. Flat screen TVs. Yeah. Right. Sure. Yeah.
But at the same time, that would diminish the value that we bring to the consumer.
Mm-hmm. First of all, you touched on so many different points there. One of them being longevity. Some of the people in the room that have been there for a long time, but more importantly, their willingness to share, almost a driving factor. And your question, or at least what you were observing, is that from the nature of the business? Is that just the people who are attracted to it? I don't know how to answer that, but I'm finding the same trend as you are out there, especially being around for 18 years and working with so many different advisors, or you use producers. But I think as we age into this business, there is this need, I find, for those that have been around a long time to share what they've learned. There's so many experiences, especially when you think about the product that we're involved in, that require time. You know what I mean? A triggering event has to occur, and sometimes, and that triggering event for our business is that there is a death that occurs, right? And you see the ramifications and the impact of that. And if you're young in this business, you only understand it from an academic standpoint, right? And then those that have been around a long time can actually see what the ramifications are if proper planning wasn't done, or a great example of when it was done the right way. And that experience is so invaluable in our business. And so mentorship is a really big deal. And I think it needs to continue to perpetuate itself and train the younger people. And by the way, 18 years, long time for me and you, right? It went by in a flash, but don't you feel like you're still learning? Don't you, aren't you still reaching out and meeting these people who've been around a long time to gain more knowledge from them? And I do think that is a function of our business. And thank goodness that our community, this life insurance community, is like that. We're built that way. And so those of us that are willing to learn can still find avenues to do so. But that's a really great point, Bob. That's a really great point.
Yeah, and I think I think the root cause of that is just the desire to want to serve.
Yeah.
And so with that mindset, let's talk about, let's get a little nerdy, and let's not get way into the weeds or anything like that, but let's get a little nerdy and let's talk about the actual product itself. Because the reality is that's, we're selling paper that provides a promise between basically two entities, right? Yeah. The insured, or the person who is actually purchasing the policy, or the contract is what we call it.
Contract,
and then there has to be somebody who's gonna fulfill that contract, which is the insurance company. That's the reality of the two parties. We happen to be in the middle at some point, trying to figure out, which company, which carrier, which product, for which particular client does it make sense. So we're almost like artists and scientists, if you will, if I could use that term, where there is no, right? I mean, if you think about it, if you're doing this right, you're not just walking up to the life insurance bookshelf and taking off a insurance policy and saying, here you go, Mr. or Mrs. Consumer, that's for you. That's typically not, even with term insurance, that's not even the right way to do it.
Sure. I agree with that. Yeah, wholeheartedly.
Right? So it's really trying to find the personality of the consumer, the insured, I'm just going to use this term, consumer. Okay. The person who's watching this video, I'm just going to consider you the consumer, if you will. I mean, no disrespect if it seems disrespectful. I just want to try to keep this concise, if you will. So, and then the insurance company. Okay. So we have these two parties. It's really my job, your job, to figure out what's this consumer want? What are they trying to accomplish? And developing a plan or some type of answer or solution, right? Just like a doctor, right? They ask you a bunch of questions. I know I get frustrated with the doctor, because you tell the nurse everything, right? The nurse leaves, and then guess what the doctor does? He asks all the same questions, right? It's like, read the file.
Sure, right.
But there's intelligence in that. The doctor's trying to do is assess what really is your pain, what really is the situation that you're trying to solve. And we're kind of doing the same thing. Wouldn't you agree?
Yeah, and I think that's the art form you're talking about, right? When you said we can call ourselves artists, if you think about how many permutations, how many meetings have you had to do in order to figure out and dissect and help someone figure out what their issue is, right? Because sometimes as consumers, I'm a consumer too, you are too, we don't know, right? And so someone like you, your job is to help us figure that out. And it's those series of questions. It's almost like you have to become an expert interviewer, don't you? And helping us understand as consumers what we're looking for at the end of the day. Because at the end of the day, we don't know. We're coming to you. And by the way, unlike a doctor, that's a physical ailment, that's a little easier to dissect. A lot of us there's emotional issues that we're trying to solve, right? Long-term issues that keep us up at night, but when we wake up in the morning are long gone with our dreams, right? You know what I mean? And we get into our day. So anyway, yes, I agree with you. I think what makes your job or an advisor's job so special is that you have to be able to ask those questions, listen carefully, and help the consumer understand what it is that they're thinking. It's not easy. No,
it's not, because sometimes we as consumers, we want to be a little guarded, right? Because the reality is we don't want to be sold.
Yep, that's exactly
right. So a lot of times I find that people are being guarded with the information, especially if you have a couple there. You always have one of the couples that is a little more open than the other. And that is the art of it, is the human art of it. Now the science of it goes where the design of the product, right? Where what kind of product are we going to use? So you consumer, you viewer, there's a few different types of products that are available. And if you're interested, I do have a video that talks about very basically in 15 minutes or less the different types of products. So right here, I'm just going to go through the names of the products, if you will. Term insurance. Okay, which most people understand what term insurance is. It's temporary coverage or life insurance. Death benefit is it really is designed to be fill in the gap, if you will, of that short period of time. Then there's something called permanent insurance is the industry term. And there's a few different types of products and benefits that fall under that term. Okay, the first one is whole life. Whole life, there's different ways to design it, but the idea with whole life is it's littered with guarantees. And it also builds equity within the policy itself, within the plan. Okay, some can call it a savings vehicle, some call it an accumulator. The reality is, it doesn't. I don't know until we have that interview, the art part of the conversation. But those are kind of the very basics of the straw man. And then you have what's called universal life. And this is really where it causes a lot of confusion, I think. And the reason it being is that there's a few other types of policies that fall under this universal life. And so the first one is just universal life itself. All right, it's based on interest rates. You earn an interest rate within the policy, and that's the equity within the life insurance policy. Then you have what's called variable universal life. Variable universal life, we use the term variable because within it has what's called separate accounts. Those separate accounts, to use a familiar term to most viewers, is mutual fund-like investments. Okay, your money goes up, it could go down based on whatever your separate accounts or your mutual funds within the policy is. Okay, so that's why we call it variable. Your money, your equity can be variable, right? And then the third one is kind of a hybrid of the first two, the UL, the universal life, and the VUL, the variable universal life. And it's called index universal life. And really, it's the idea of it is to be to allow you to have control over how your equity is going to accumulate within the policy, but eliminate as much risk as possible. Okay, it's for really the conservative consumer. And so those are the various types of policies that are out there. Now, we can go into the weeds and look at all the other types of variations within each of those. We're not going to do that. We're just going to keep this high level again. But the idea is, okay, so let's talk about this, Charles. So let's say we did the art part. We did a great interview. The people, the viewers opened up. They really opened up their heart and shared what their desires were. And it gave me, the more information you and I get, the better we can be at trying to figure out which of those types of plans.
Sure.
And let me preface this. It doesn't have to be one.
No.
It could be a multiple of those.
Great point.
Right? And I find a lot of times in the insurance world, our insurance advisors a lot of times get very narrow-sighted that we have to find one thing that solves the solution. And that's not necessarily the case. And that's where the science comes into place, is how are we as the mad scientist going to figure out what that looks like to create the solution that the client just opened up and shared that their pain was, or what they're looking to accomplish.
Right.
So in your opinion, Charles, working with the various advisors, and I'm not going to put you on the spot and say, hey, which one's your favorite? Because I don't necessarily think any of us can really say that.
No.
And because the reality is it's not ours. The plan is the consumer's. So they each do different things. So share with me, maybe share with me a little bit about a whole life, and let's talk index universal life. Let's just use those two, keep it simple.
Sure.
Talk a little bit about some of the things that you personally like. We don't need to go with what carriers like or what the industry, but just you like and why. What's and there's no right or wrong answer to that. It's just why do you like those?
How about this? Can I just answer that from what situations I've found one to be more attractive for the end user? Because remember, I deal with advisors, and once in a while I'll go and talk to their clients too. But in working with advisors, so what I've found, number one, let me address a point that you made, and it's so salient. There is no right product. There is no one that trumps the other. You know, it isn't about an appropriate fix. So you want to discuss whole life versus index universal life, right? So what I've been finding recently in our business, whether it's a corporation, large or small, or an individual, I've been finding more whole life being placed when precision was necessary. You want something more of a bond-like return, let's say more consistent return, because that's what whole life tends to be. You can kind of depend on that dividend to be coming in, especially if you're choosing the right carriers. But we're projecting these things 15, 20, 30 years out, right?
Yeah.
In some of these cases, the advisor and the client wanted to make sure that almost to the penny, I can guess what this contract will have. And the good whole life carriers, and there's a handful of them out there, You can do that with their product. Their history shows that they've been good to their policyholders. They've kept their expenses low, right? They've kept their dividends going. In fact, most of the good whole life carriers out there are mutual carriers. In fact, they have to be, right? The policy owners are receiving their dividend, and you can almost guess the penny what that cash value and death benefit will be 15, 20 years. So precision is the key. But what I'm sacrificing is upside potential, right?
Yeah.
Enter the index universal life market, where you can actually have some capture of the S&P 500. You can get some of that up to a limited scope, and then you'll protect yourself on the downside. And those are for folks that are willing to assume a little bit of the risk because they believe in the markets long term, right? Longer term, I think the S&P 500 will do better than 6 or 7%, whatever that number is you feel. And I'm willing to take that risk, even some variability in my rate of return. So that to me, it's more of a mindset of both the advisor and the clients that we're positioning for. Is that a fair answer?
Yeah, no, I think it is. And you said a couple things that I wrote down a couple notes for, because the reality is, so for example, for me as an asset coach and a tax strategist, I try as much as possible to be agnostic to product.
Good.
Because the reality is, again, it goes back to the art of it. What's the client trying to accomplish? And you mentioned this earlier, there is no right one product. There is no right one solution. It's really everything has some sort of gap in it, or some kind of flaw. You even see it in the medical profession where, sometimes a doctor has to use 2 prescriptions to try to get an outcome that is desired. And even a lot of times that may be changed. Why? Because the consumer or the patient doesn't react well to one of the or both of the prescriptions.
Good point.
Right? And so I think from our perspective as an advisor, where the science comes in developing certain things, you're right. The whole life is a fabulous product that provides that guarantee, provides that peace of mind. Somebody who is looking for long-term equity or appreciation within the plan. You had said a couple things where dividends. So what is a dividend? If I can explain really briefly to the viewer, basically a dividend is profit given back to you as the policyholder. And how's that work? Well, you're a business owner. So think about from your perspective as a business owner, right? We talked about this. Cash flow. This is all about cash flow. And so when a carrier, an insurance company gives you dividends back, they did a good job of their cash flow. They have decent revenue. They have controlled their expenses. And they have also brought on good business. So what's that mean? As a business owner, you know, when you first get started in business, you're taking every client, right? You're just trying to do whatever, sell whatever, just to stay alive. But at some point when your business matures, you get to be a little more picky and choosy about the clientele or the type of customer you want, right? Even restaurants say it on the door, right? We have the right to refuse service.
Right. Now,
the reality is someone really has to be a you-know-what to not get service by a business, right? And that's not, so from an insurance carrier's perspective, they have something similar where they go through the underwriting. They want to make sure that they understand the person that they're offering coverage to, because it's a promise. And they want to be able to understand what they can offer, not because they want to charge more, because they want to charge the right price. They want to get you what's right. And so I think a lot of times there's a misconception about that from other areas in the industry, trying to make it sound like, you know, certain types of industry like life insurance or other insurance carriers are just out there to gouge you. Well, that's a horrible business model. It really is a horrible business model for any carrier. And if that has happened in the past, guess what? They're not in business anymore.
Very true. Very true.
And you can look at that from every industry, the same thing. If you have a bad doctor, guess what? They're not a doctor anymore. If you have a bad mechanic, right? Exactly. If you have a bad mechanic, they're sitting in their shop by themselves, working on their own car.
Right.
every industry that's the case. But I wanted to make sure that was very clear, is that a mutual company that you had mentioned, they share their successes, their cash flow with you as a policy holder. So that's very important. And one of the things that Charles was talking about is running it to the exact penny. There's guarantees with this. There's contractual guarantees with these types of policies. And so that's what Charles was referring to, is that we have a guarantee section, and then we have a dividend section. Okay, we have to call it non-guarantee because it is a dividend that could be switched occasionally. But with a good carrier, and those handful of carriers that Charles had alluded to, they're not switching their dividends every year.
Mm-hmm.
It's very consistent. It's the tortoise and hare story. The other thing is that you talked about was long-term.
Mm-hmm.
This is the key. I think a lot of people think that, oh, okay, well, somebody's telling me this is like a savings, so I can go to the bank and withdraw money. Yeah, but remember, savings it's like saying the word school,
mm-hmm.
right? The first thing that comes into somebody's mind when you say school is what their experience of schools is, good or bad. Right? So it could be one person can say, oh, high school was amazing, right? One person can be remembering their college because they're going to the college football game or whatever.
Yeah. Never thought
right?
about that.
So,
right. Yeah.
So the word savings has multiple meanings for people. So I think the reality is that we need to focus on and is long term.
Mm-hmm.
And when we're putting a plan together, the art and science of this is the plan is to find what gaps we do have, so we know how to fill those gaps.
Mm-hmm.
And the same thing with you as a business owner. Think about yourself as a business and how you run your business. There are certain situations, if you're a manufacturer, there's certain parts of your manufacturing process that's slower than other parts. And so to allow the process of that product to go through smoothly to deliver to the client, to the consumer, you have to understand that process. And this is very similar for us as well. So now you had mentioned when we were talking about index. Let's talk about Index Universal Life a little bit more, because compared to Whole Life, it's a newer product. Whole Life's been around for a long time.
Mm-hmm.
Index Universal Life, I know there's a lot of, it's almost talking about different politics, right? If you're on one side of the aisle versus the other, right?
Yeah.
It's very rare that you see hands across the aisle shaking hands.
You're so funny. Yeah.
Right.
That's
There's
great.
a lot of emotion with a lot of this, and the idea is they're all good, but why are they all good? And really, it's based on you, the viewer. What makes one better than the other? It's based on your situation. So, Charles, let's talk about index a little bit, and let's talk about a couple technical features of what makes an index product.
All right. Okay, so Index Universal Life, what the carrier at one point said, listen, we're taking your premiums. Part of that goes into your account, let's say your life insurance product. Cost of insurance charges come out. But whatever's excess, whatever's left over, we're going to give you a crediting rate for that. We're going to invest that in our bond portfolio, which is what most carriers are invested in. And let's say that we generate about a 4.5% rate of return on your behalf, right? Well, we can actually give you that 4.5%. That's just straight universal life, right? That's that older product you mentioned. But as we got more seasoned, as product providers, as carriers, well, what they did was they said, well, why don't we take that 4.5%, and what we can do for you as a consumer, we can take that and invest in an option, right? That's correlated to the S&P 500. What a great idea, isn't it? And so what we said in that proposition is, we'll take your dollar today. We'll take that 4.5%. We'll invest it today. We'll take a look at the market 1 year from now. And if the market drops completely, let's say it goes to -10, what we do is we'll let go of that option, and we'll credit you at what we call floor, right? And that floor could be, for one carrier, 0%. For the carrier I work with now, it's 1%. But we'll protect you on the downside, is what they said. All right. However, if the market goes up, well, we can actually credit you back some of that market experience, right? But we'll do that up to a certain point. And let's say for most of us, we're around 10.5% today. So if the market does 20, listen, we'll give you 10.5 of that back, And what we're doing is we're going to keep you in this growth and downside protection, so that you can moderate your returns, but at least you can get some of the upside in the market. And so for our consumers who want that 4.5%, well, you've got that product. It's a universal life chassis, and a lot of people get that product. But for those who want a little bit more involvement in the market, right, especially when things are going well, we all want to be a part of it.
Yeah.
Well, here's a product that we can do that, but then we don't have to go all in, and that's what universal life was meant to do. Dip your toe in the pool, and experience some of it, but don't get too crazy with it. So that's the purpose of Index Universal Life.
That's a great description. Thank you, Charles. And there's a couple points that you brought up that I find interesting here. Is the first key is your money premium gets distributed. It gets split up. So for example, as a business owner, when you earn revenue, that whole revenue from the sale of a product, does that just go into the bank and all of a sudden it's profit right away? Well, no, it's not. That revenue has to pay for the cost of that product or service or the expenses of the business, right? So that does get split up, okay? In the business world, we call it G&A. In the insurance world, the same thing occurs where we take your premium and we split it up. Now, the portion that goes into the bank, as a business owner, there are times where you're probably looking at how to improve a product, how create a new product. And when I'm using the term product, we can also insert the word service, if you will. We're trying to improve our ability as a business to do what? To add more value to your consumer. And so we in the insurance industry do the same. And so when your money goes into the bond portfolio, and let's be very honest here, probably the best stewards of money are insurance companies.
Yeah.
No matter what people say, the insurance industry has been around from the very beginning. Whether it was a group of neighbors putting rocks in a in a basket just in case the tiger or the saber-toothed tiger came, they could all pull out of the basket and defend themselves.
I'm trying to vision all this. Yeah, it's funny. Probably started
There's
off
our first.
right?
That's our first life insurance policy. Survival, called a survival policy.
That's funny.
But nowadays we're obviously more sophisticated, and so the insurance industry definitely is better stewards, and it's all about data, right? With computers nowadays, we always hear it's about data mining. Now you can get a degree of being a data engineer. Well, the insurance world has always done this. The insurance industry has always done this. That's how we assess risk. That's how we assess what makes sense and what doesn't make sense, how to charge for our services. And as a business owner, you do the same thing. If you had a product, a widget, let's say this was your widget, and you went out and sold this for $100 and no one bought it, guess what? You know it's overpriced. So you got to lower your price. And so everything works the same way. Now, the other thing with what you were saying about the index policy, Charles, that's interesting is that the insurance company is using their investment portfolio or what they're doing in the bond portfolio to try to get us, the consumer, greater equity. Right? And so think about that as a consumer, as a viewer, think about that. Does the insurance company have to do that? No, they don't. Well, we can use the argument that if they want to be competitive with other financial distributors, mutual funds, stocks, bonds, banks, whatever, CDs, whatever, you can make the argument, yes, they have to stay relevant. But do they have to do it with their money? Couldn't they do it with your money as a consumer? They could. But they've chosen not to because insurance industry is a conservative industry. Remember, it's a contract, a guarantee to fulfill to you as the consumer. If something bad happens to you, pass away, or there's some other products, we'll talk about some other features of these products called living benefits in a second. But what's happening is the carrier is using their dollars to try to get a little more equity for you, the consumer. But they have safeguards, like Charles was saying, there's a floor. Okay, so I like to use the visual of a stairs. If most people have two-story house now, and if you were to look at the side profile of a stair, you can look at, that's how the stairs go. That's how your equity essentially would go with regards to the insurance company sharing the money and trying to put it into an index by using options. And if all of a sudden your stairs, you were walking and all of a sudden your stairs just turned into a slide into the basement, what would happen?
Fun, it's not, right? Yeah.
Right, it does sound like fun, but holy cow, that's
not with my
unless
money.
you're expecting, not with my money, exactly. And that's essentially what the market does, right? And so insurance is there to always be there long term. And so when you look at the side profile of the stair step, I think it's a good feature to have. You know, whole life is probably more like a kind of a slow up, angular chart, if you will. I'm losing my mind of trying to figure out.
Right. Yeah.
Right. And as the dollars get greater, the percentages compound more and that sort of stuff. But the initial years, yeah, maybe not so sexy, right? But we know that because we understood that in the very beginning. Index, we have the opportunity to participate and have a little more equity build up in our policy or in our contract, if you will. So if people have more questions, if you have more questions as a viewer based on this, because this is a very technical aspect. Charles and I could probably just take a left turn and make this really into the weeds. We're not going to.
Sure.
But
yeah.
if you do have more questions and you want to see how this works, obviously reach out at the end of this video podcast. You're going to have contact information I'm going to share with you. You probably already got it. That's how you got this podcast. But reach out to me and we'll help you with that. So let's take another step and talk about how the life insurance industry has evolved. We have looked at the society. We have seen that there are certain insurance coverages that can't be sustained because of the inability to understand what the potential claims are. So let's use long-term care as an example. Okay? Long-term care could also be argued as a newer coverage, right? And when I say newer coverage, I'm saying anything 40, 50 years or younger.
Yeah, fair enough. Yeah, relative to our business, that's very young. Yeah.
Right? And so, but what's happening now is medicine has improved. So when people used to pass away from a heart attack or a stroke or cancer, medicine has now been improved so much that people don't pass away from those ailments anymore. They actually live. Now, there can be an argument if their lifestyle is the same as before the heart attack, stroke, or cancer. Sometimes it's not. There are probably some effects from those events that cause their lifestyle to be different. And from a financial perspective, more expensive. And so there's certain insurance coverages that you and I can get as consumers, but the life insurance industry has decided to take a step into that world a little bit, to provide a little more extra for you and I as consumers. Not to say, hey, we can do all things to everybody, but more from a standpoint of saying, if we can help, we want to try. Because remember, life insurance industry is about service. And so these carriers are about service. And so let's talk, Charles, about living benefits. Let's talk about what that term means and some examples of that, if you don't mind.
Yeah, sure. I think you teed it up perfectly. Essentially what we're trying to do is help mitigate what you said, that this dynamic that we're living longer and our quality of life, even though we're living longer, has changed, right? It's not exactly the same. Just because you made it to 90 doesn't mean you're reacting like a 40-year-old anymore. And so insurance carriers came and developed a couple products. One of them, the genesis years ago, was long-term care. It was a brilliant idea, right? Because if we need medical attention, we need help. Why deplete our resources, right? Or even worse, deplete our kids' resources, because essentially that's what's happening. Either we deteriorate what we could pass on to them, or we have to have them reach into their pockets to help take care of us. And, you know, Bob, you're a parent, right? How would that feel, right? We love our kids, and we don't want to shoulder this. So the insurance carrier came out with this product to help mitigate some of that. And when we are incapacitated in some way, they call it ADLs, right? Was it daily activity? What was it called again? Give me the daily activity. Anyway.
Activities, yeah. Basically, this tasks are the duties that we do every day. So feeding ourselves, dressing ourselves, feeding ourselves, transferring ourselves. There's 6 of them.
Yeah, and so and these are obviously essential to us living our life. And if we can't perform at least 2 of those, then we qualify for this product to help pay for people to come take care of us, for medication, to be housed somewhere else. And so it was a great product. And so over time, these products were built as standalone products. And now the carriers got wise and said, well, why don't we attach these to our permanent products? So either your index universal life or your whole life product. And there's differences between the two. And I'd love for you to touch on that since you touch both markets. But even attached to a life insurance product adds a benefit to your life insurance. So, you know, we buy that for something else, right? Obviously, the worst case scenario is at our death, or in some cases for accumulation. But to have that added feature to it, I thought enhanced it even further. And some of those are morphed into chronic illness, and there's some differences there too that we can geek out to. But I think you get the idea of what the genesis of that product, that long-term care, it's why it was developed and what it's morphed into today. And it's essentially something your viewers should be researching and looking into, or asking you about, you know, your advice, because there's so many varietals now. I mean, you know, over time we've had to evolve as carriers and change some of the, you know, the attributes to these, you know, and so a lot of research to be done in that world.
There is. You're absolutely right. And especially, it's not necessarily just that we are living longer. There are certain cultures that inherently live longer just because of their lifestyle and their ability to live their normal life. There are certain cultures that are less healthy than others. And so, but we're you know, and we're blessed being in the United States where we can all be together, but that poses a certain strain or concern on the deliverables of these coverages. So, because you can't find one product for one person. I think that's what's starting to happen is that, well, let's just look at it. What's better if we had our money short term or long term? Could we do more? If we had the ability to have money grow longer term or shorter term, where do we see our money being able to enhance? And it's usually longer term. If we can spread expenses longer term, we can allow our money to grow longer term, just from an actuarial perspective, a math perspective.
That's a great point.
With the life insurance, right? And I think with the life insurance aspect of it, they're based on longer term. And health insurance is short term. Auto insurance is short term, right? These are things that there's claims today. They're more immediate, and so they pose different actuarial numbers or risks for an insurance company. Life insurance, we all know it's long term. We know what life expectancies are, whether you look at the insurance company's numbers or you look at Social Security's administration's numbers. Either way, either number you look at, life expectancy for most is in their 80s. Now, as you get closer to those ages, or you get older and you get closer to those ages, your life expectancy can actually extend to beyond that based on your health. Well, you and I don't know how to do that, but insurance companies do. So that's how they're able to price a lot of this stuff and understand it. And so again, they're not saying, hey, we're going to be all things to everybody. But if we can provide some kind of support and some kind of help, whether you do have existing coverage or you don't, we want to be there as a service to our society as a carrier to say we want to help you. Now, let me say that this isn't all altruistic, right? They're not just doing this because out of the goodness of their heart. there's a marketing aspect to this, right? There's a pricing, there's a profit aspect to this as well. Let's be honest, right? They're enticing or creating the ability to say, hey, you know what? Okay, I'm going to buy that policy now, or I'm going to contribute or invest, or whatever term you want to use, that policy now, because you do add that. Well, for the insurance company, that's great. But for me as an advisor, as a professional, I think it's great, because if there's something that allows a client to say, I want to provide for my family, I want to say I love you in one other way that we may not have been able to before these were added to these policies, these living benefits were added, then essentially, like you said, in a long-term care event, as an example, who's going to care for you? Your kids are not going to allow you to suffer.
And that's a wonderful point, Bob. And I think what you just brought into that conversation is the planning perspective. It's what you do. Yeah. It's what a good advisor will do when electing which of these products are appropriate for your client, and also in choosing, right? You just can't walk up to the shelf, like you said, and just pull one down and say, this is good for you. There's so many different attributes to each one. Again, based on pricing, based on experience of that carrier. That could make sense to any particular individual. By the way, activities of daily living. I just thought of it while you were talking.
Yes.
I had to jump in, man. I had to jump in. So.
Isn't that funny how we have those little
totally. Yeah, right.
gaps in our brain waves, if you will. Yeah, you know, and I find, Charles, that this part of the business is what's fun, because you get to use both sides of your brain, but the reality is you're trying to provide a solution for a client. And so what are some of the planning strategies, the planning ideas for people to think about? Well, there are many. Remember, it is life insurance first. We're using the life insurance wrapper. There's certain rules, guidelines, whether it's through the IRS or through the Department of Insurance, whatever regulatory body you want to include into this conversation. First and foremost, it's in a life insurance wrapper, okay? Just like an umbrella, right? If you have an umbrella and you're walking in the rain, that umbrella, if you pass it to me, it's still the same darn umbrella. What's under the umbrella has changed, right? It went from you to me. And so the life insurance wrapper is going to be the life insurance wrapper. It's just what it is. What's underneath that wrapper is really the art and science of what we're trying to accomplish. So if someone's looking for enhanced equity building, they're looking for that cash, the accumulation for different benefits that it provides, and whether it's a tax benefit or a liquidity benefit or a dividend or lack of a better term, I don't want to use the term rate of return, but I choose appreciation. So what I want to, how I want my money to appreciate. If that's your focus and that's your desire, then that's what we try to accomplish. But it's still within the life insurance wrapper. Now, there's certain switches we turn on, certain switches we turn off, and that's the design of that particular strategy. Now, if you run into somebody who needs the life insurance, who needs the death benefit, then again, that's what we're going to focus on. We're going to focus on how do we get that? How do we get it based on meeting all your requirements or what your desires are as a consumer, and anywhere in between, right? And whole life, term, universal life, variable universal life, index universal life, there's a lot, and they all have different features. And so you know, it's this podcast was really designed to kind of give an overview, not to say one is better than the other. And I think, Charles, from my opinion, I think if I can pat ourselves on the back, I think I think we've done that. And you know, as a consumer, when you're watching this podcast, if you have a bunch of questions, obviously write them down. Your questions are going to dictate that next podcast, are going to say, hey, you know, there's a bunch of questions, and I'm getting this from a lot of people, and maybe we should address these questions and provide that information to the consumer, because that's the point of this, is really to provide information to you as a consumer so you know what to do, whether your brother-in-law is the insurance guy or some guy down the street, or you've never even thought about this, and you just thought, hey, You know, I heard my wife said something about life insurance at work, and I don't have a clue of what that means. And you decide to watch this. So I just want to say, and we'll close this up, unless there's anything you want to add, Charles, to the conversation, any thoughts or any points that came to your mind as we're having this conversation that you think would be helpful?
I think you did an excellent job of scratching the surface, Bob. And you're so right. There's so many more details and it's so much more depth you could bring to that, just this one topic. But I think what I've learned from listening to you is that this is just one component of so many other pieces of the puzzle you put together. And so it's good to be able to not only hear that, to work with you, and to be part of the podcast. So thanks for having me.
Well, thank you, Charles. I appreciate that. So okay, let's end this up. Let's close this up. Let's do a little bit of housekeeping and share some information with you, the viewer. If you want to reach out to me, you're welcome to reach out to me directly, 714-450-5265. If you want to shoot me an email, which is probably the best because more than likely you're going to have questions you want to talk about. So rather than catching me off guard on the phone and asking me a question, if you want a thoughtful answer, or me also being able to maybe send you a video that it can address that answer. A lot of videos that reach certain topics, try to use stories and analogies to kind of hopefully hone in some understanding of what these questions are that you're looking for. But you can email me at info at assetcoach-taxstrategist.com. Once again, that's info at assetcoach-taxstrategist.com. And then based on, I'll get to you as soon as I can. And but again, hopefully this was helpful. And if you have any comments or anything that you'd like to share with me, good or bad, it's fine. We all have opinions. We all have tough skin as well. The idea is to provide the best information for you, the viewer. And if that means that there's some added content that we need to do, great. And I'll find those individuals, even if it happens to be Charles, and I bring Charles back on and you're stuck with the two of us again.
Happy to help, Bob.
Thank you, Charles. I appreciate that. So I'm going to end this up. I appreciate your guys' your time and your investment in understanding a little bit more about life insurance as a topic. If you're on our website, there's also going to be links to some other topics. Just so you know, there will be a video podcast on annuities as well, which is another insurance contract that is available. And so if you're interested in about annuities and understanding the ins and outs of that as well, go ahead and take a look or keep your eyes open for that podcast when that comes out. So once again, this is Robert Wolf. I'm an asset coach and a tax strategist. My job and my goal is to allow your assets to work more efficiently while at the same time seeking tax enhancements to build and create your wealth so you're able to compound and get to your desired outcome whichever way that is. So thanks again. Appreciate your time and make it a great day.